if you look at everything they're doing, first of all, it's about securing their ability to fight steel, aluminium, rare earth, chips. It's all about being able to have a war with people you don't like. If you don't have chips, if you can't make chips, if you can't make steel, if you can't make aluminium, you can't fight a war.
The U.S. stock market is at a 100-year high versus GDP. It's absolutely bonkers what we're seeing out there. The U.S. dollar is recovering, and gold and silver are remaining flat. They seem unfazed by what is going on a geopolitical and macroeconomic side, which is interesting to see. But I've invited a fantastic guest to discuss what is happening right now. We had the U.S.-EU tariff deal, the Japan-U.S. tariff deal, and we have to dissect that a little bit. What does that mean for us as investors? How do we play this? What does that mean? We're in the middle of July here, or at the end of July here. And how do we do this? Like, we got Fed Day today, as well as we're recording this a few hours before the Fed announcement, unfortunately. So we can speculate a little bit, but I think the signs are very clear. There's not going to be a cut. Only 3% chance of a cut ahead of the Fed decision here in a few short hours. As I said, I've invited Clem Chambers. He's the founder of AnewFN. Really looking forward to catching up with him. He's a friend of the podcast. He's been on before. And before I switch over to my guest, quick reminder, hit that like and subscribe button. It helps us out tremendously, and we much appreciate it. Clem, thank you so much for joining us again. It's good to see you again. How's your summer?
Yeah, well, summer's always good. Unfortunately, when everyone goes on holiday, I can't work because they've gone. So as a workaholic, summer is not necessarily my favorite time. But these days, there's so many reasons for people not to be working that you get 4 months of work a year, and everything else is wrecked by people's holidays. But never mind.
Yeah, no, it's true. Europeans disappear. I'm traveling as well, as you can tell. But it doesn't mean things slow down necessarily. They do in the markets, though. It's like, unfortunately, I'm not following the markets too closely while I'm traveling, but it seems like things in general have slowed down. The reactions to things are not as hot as they were, like, let's say, in April or May. Is that a fair assumption, Clem?
Well, I think in the areas we're interested in, it's happened. So, if you look at gold, for example, it's going sideways. And if you look at Bitcoin, it's going sideways. If you look at equities, it's now back to where it was before the tariff crash, as I'm calling it. So it's back. So I think the intervention, which I believe there has been lots of, may come to an end. So that should re-inject some volatility, because there won't be the magic hand absorbing or selling beyond a certain point. So that's quite interesting. It's noticeable these days that the market goes a little bit doolally at the end of every month when all the funds are trying to do their sort of shop window dressing. So it'd be interesting to see what happens 2 or 3 days after the beginning of August, when actually the normal market will resume. Because what these blooming blighters do is they go, oh, we've made a load of money this month. Oh, we better take some profits and blah, blah, blah. Oh, we've overcommitted and we better get back to where we say we're going to be with our commitments. So they do a lot of shuffling around at the end of the month. And then, of course, they have to reopen in the beginning of the month, which has the sort of end of the month dramatic moves in terms of portfolio management. It always annoys me, because things go a little bit weird the last 3 or 4 days of the month, and then the first 2 or 3 days of the new month.
That's quite interesting, because we're getting a lot of data dumped on us this week as well. Like I mentioned, it's Fed Day as we record this, but also a lot more of the jobs reports coming out later this week in the U.S. on us. But Clem, we got to dissect what happened over the weekend. Ursula von der Leyen and Donald Trump met in Scotland, and they agreed on a tariff deal. Put that into context for us. Like, what is your perception of it? What do you think of it? Like, what's your opinion there?
Well, it probably means the opposite of what everybody thinks it means, because that's the way the market generally works. If you think of America and the dollar as the reserve currency, well, to do that, you have to be exporting your currency, and to do that, you have to have a import-export deficit. So with Trump trying to stop that and balance it, or even be a net exporter, with America going mercantilist, you could say that could be the end of the dollar as the reserve currency, because one follows the other. So that's quite interesting. Another way of looking at it is it is actually a giant tax increase for America. So, he wants to balance the budget. Well, how do you balance the budget? Well, you have a tax, don't you? You tax the budget deficit away. Well, tariffs is a tax. And say, as they might want to say that, oh, no, they won't put prices up. It will be magically absorbed by somebody. Well, it probably won't be. So if you actually do the math, and you can, do it as you see fit, really. What I say isn't necessarily going to turn out to be the case, but it's a 1 or 2% flat income tax, even on people that don't have an income. That's how much it will increase prices. So, the American government is going to have all these tariffs at income, and that's going to help them balance their budget by quite a chunk, by about a quarter. It will put up prices by, quite a lot, and it's an increased tax. And it's also reversing the idea of the dollar being the reserve currency, which has to be exported. So there's all sorts of things that are going to come out of this. And of course, if you're a country and America says you're going to get tariffs, you're going to get tariffs. I mean, there's not a lot you can do about it. Yes, you can fight, you can scream, you can kick, you can make matters worse, or you can just take it lying down like everybody's doing. And, we'll see what happens next. And, it will hurt, but it won't necessarily hurt too much. And the other thing that the whole point about America being the reserve currency and being a net importer, is that you are basically, in a sense, making everybody reliant on you, everybody dependent on you. And when you get dependency, you get weakness. So as an American strategy to make everybody weak, running this deficit has been a very good one, because it makes people dependent. And dependency is not a recipe for strength or success, as we all know. So America's decided not to, undermine people's economies by basically paying the barbarians like the Romans used to. Quite the opposite. So it actually will boost in the long term and bolster in the long term Europe and other places, because they will have to get their skates on. And if you look at the criticisms that you hear about Europe, for example, is this lack of aggression in terms of economics, this lack of getting your skates on and getting stuff done, because everything's bogged down by bureaucracy. So now you've got a choice: get your skates on, start thinking about cutting back on red tape, and be a little bit more vital, because now you've got to more so stand on your own 2 feet. So that could be, I believe that would be very, very good for Europe, and that would be very, very good for Japan. And I think it's going to turn out very different from a lot of people's expectations.
Glenn, you just mentioned it might mean the end of the US dollar as a world reserve currency. And maybe you can get a bit more granular on that. Like, what are the ripple effects of that statement? Like, what does that mean? And what does it mean for us as the layman?
Well, first of all, I'd say, why is that a good thing for America? What's so good about being the reserve currency? What's so good about having to run all these deficits to pump your currency out into the world to make it the one that everything's been used on? Oh, they say seigniorage. Oh, it means that they produce more money, blah, 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 blah. And it's, it's a geopolitical thing. Why is it a good thing for them? Because it means they have to basically, give all their stuff out and have this horrible, trade deficit, which obviously any country with a trade deficit is going broke, because you are basically selling this family silver. And to be the reserve currency, you kind of have to do that. And if they just go, well, let's not do that anymore, what's going to happen? Well, nothing bad. I mean, it might mean they actually have to be what they want to be, which is the workshop of the world again. I keep saying this and people kind of miss it. When Britain was the workshop of the world, it ruled the world. When America was the workshop of the world, it ruled the world. China is now the workshop of the world. So finish the sentence. Yeah, China is the workshop of the world. All this is because America can't make boats, can't make tanks, can't make stuff, because it's being the reserve currency. It has basically shed its assets into the rest of the world and ended up hollowed out by that thing. Well, and also enabled its politicians to spend like wild sailors. So, it's not a good thing, is it? So actually, potentially giving up reserve currency status would be a really good thing for America, because it would force it to get back to basics, get back to being a workshop of the world rather than the data center of the world. And that is potentially what's going to happen. Now, China, it's quite difficult to actually explain this, but if you take all the money that China has in the system, i.e. yuan or renminbi or whatever you want to call it, and you take all the American dollars in the world, that are out there in the world going spin, spin, spin. There's twice as much in dollar terms of the Chinese currency. So China has twice as much money, cash money, real money, than America. Obviously, it's got 4 times the population, but it's actually got twice as much cash. And do you think the Chinese don't want to be the reserve currency by accident? No, they don't want to have to do that thing where they are the importers of other people's stuff and they run the trade deficit. They want to be the opposite. They don't want to be the reserve currency. They want your currencies. They want all yours because they can come back and buy your assets. Oh, thank you very much for the dollars. I think I'll buy your farmland now. Oh, thank you very much for the dollars. I think I'll buy your tech companies now. Oh, thank you for your dollars. I think I'll come back and buy your real estate now. I mean, you know, if that cycle goes on forever, they own everything and you own nothing. That's what's happened in the UK. Go to the UK, walk around all the best real estate. It's owned by people from outside of the UK because we got this deficit. They end up with the pounds. They come to the UK and go, oh, Mayfair property. We'd like that. Thank you very much. It's ours now. Yeah. So running deficits, you are basically going broke. Yeah. And if you don't sort that out, you end up being owned by someone else. The guys that are selling you the stuff, you swap your stuff for their stuff ultimately. So if you run a deficit, they end up owning you. And you know, Trump is trying to fight against that long-term desperate trend before it's too late. And if you look at everything they're doing, first of all, it's about securing their ability to fight steel, aluminium, rare earth, chips. It's all about being able to have a war with people you don't like. If you don't have chips, if you can't make chips, if you can't make steel, if you can't make aluminium, you can't fight a war. So, you know, that's the terrifying part of all this, is that it's people limbering up to be able to have a toe-to-toe conflict. And that is one of the reasons why gold has gone up. So, you know, now that has people have worked that out, that unknown, the penny dropped. And all these countries are buying gold to put in their war chests. And that's what's made gold go up. And now they've got equilibrium. Because remember, there's 3,200 tons of this stuff being dug out of the ground every year. And you can do the math on that. That's a lot of money. And it's still got, you know, you've got to print that money and buy that gold and put it in your warehouse. So there is a equilibrium point, and we're at it. Now, if the global stress goes up another notch, gold will just go. And I think that's potentially quite likely.
Yeah, we'll get to gold in a minute here, Clem, because I really want to understand, like, why is it moving sideways? Like, we're in this narrow band. So we'll talk about that in a minute, because I want to stay on the
let me explain that to you. Okay, markets try to get to equilibrium. Okay, so when a little piece of news enters the news, like Clem's buying gold will go up 0.5 cent or probably down, because this new news has gone in and it's absorbed. Meanwhile, the market is thinking about stuff, but it's thinking to about a year out. At a year out, people give up and say, oh, I can't work it out after that. So what you're seeing with the price is where the market expects reality to be in about a year. So what you're looking at is not yesterday, you're looking at this time next year, you're looking at 2026, August the 1st. Yeah, so that the human calculation, the hive mind, reckons this where we'll be in a year's time. Now, obviously, if an unknown enters right now, you won't know it, but a lot of people will. Well, not many people will, but they'll tell a few people, and they'll tell a few people, and that information will flow, and it flows like honey. So, and then suddenly it will, yeah. So that information enters in places, you know, the sort of people that have satellites and can, you know, read the book you're reading on a park bench. They go, oh no, that's going to happen. Or, oh, we have to be prepared for this. And that will reset the price of gold, and it will reset it as that information flows. Yeah. So we've had this move in gold because the Trump administration has said we've got to go head to head with China, and Europe, you've got to go head to head with Putin. And we're going head to head. And that's why gold is at 3,500, which is originally where I thought it was going to go, technically. And if there's another escalation, it'll go straight to 5,000. And so is there going to be another escalation? And that's all you have to think about. Is there going to be another escalation either between Russia and Europe, which probably won't have as bigger effect, as America versus China? And of course, I know there was a news piece yesterday with the British allegedly Minister of Defense said, oh, we'll go to war over Taiwan, which is the most ridiculous thing to say, even if it's true. Yeah, I'm sure the Australians and New Zealanders weren't so keen of being roped into that particular statement as they were. But it was in the newspaper, so it might be lies. But that's the sort of thing that pushes your price up. But, of course, it's already in the it's already out. He didn't have to say that. Everybody who counts already knows. Yeah. So you, us, we've got no idea what's going on in CIA headquarters, but there's thousands of people that do. The people have no idea what really the plan of Washington is, but there's tens of thousands of people that do. So that's already in the price. So now you're in speculation mode, which is what's going to happen. I see all these pieces on the chessboard, which means that this is going to happen. So that comes down to reading the runes, which is what I do, and your channel's all about reading the runes. And another thing to bear in mind with this stuff is that the only real way to see what other people know, only way that will give you a hint, is technical analysis, because they move and the chart moves. You go, what's that done that for? Why did that do that? I mean, oh, look, there looks to be a trend. And that's the information flowing into the system. And people going, oh, my brother-in-law at the DEUTSCHE says they're going to, launch, cats into space. And as that information goes down the system and through the system, it moves the price. So you'll see it with a bit of luck, if you know what you're looking for. You'll see the new information penetrate into the system and turn up in price. So what you're seeing now is the hive mind says, well, we're at an equilibrium. We know what the game is. Stress is significantly higher than it was 18 months ago, and it's going to be, pretty much balanced this time next year. But of course, all it takes is someone to, drop a few clangers, and that all changes. Or they have a meeting and come out and go, right, we are going to invade Antarctica, and off that price will go, and you won't know. You won't know. They might even change their mind. No, we won't. It's cold up there. No. Change their mind. That's a silly idea. We'll have a barbecue next Friday instead. And that's the sort of thing that you will see and scratch your head about in the markets. And my favorite saying at the moment is Bitcoin is for flight. So if there's going to be a punch up coming down the pike in a few weeks, you'll see Bitcoin run. And every time it runs and people go, oh, what's it doing that? There's a bit of a war. The last one was the Thai Cambodian thing. Yeah. So every time that thing starts to run, that is an acute situation where people are going, need some Bitcoin, might have to leave town, and up it will go. So, there are all these indicators, and you can look at them and go, oh, that means that means this, that means that, because the people in the know, and that does affect the price. So you could kind of get a little bit of a steer by looking at indicators of what's going on under the hood in the markets, be it gold, be it silver, be it equities, be it Bitcoin.
Yeah, Bitcoin is highly related to the markets, though, especially to tech stocks, right? So tech stocks are doing well. So what do you make of that correlation then, Clem, between Bitcoin and the tech stocks?
Well, Bitcoin was meant to be uncorrelated, but it's obviously very correlated now. It's in this la land of, Bitcoin reserves for companies. Somehow they're going to buy Bitcoin and they're going to become infinitely rich at the time when it's only Bitcoin and it's $1 million of Satoshi and all that stuff. But you will see it run every time that there's people going to drop bombs in about a week. And you can just go back and have a look, and you can see that there's a very strong correlation there with people that need to get out of town or think they might need to get out of town in a hurry. And there's lots and lots of countries which are basically kleptocracies, i.e. the people that run it steal all the money, and then they get in trouble, maybe internally or maybe externally. Well, what they're going to do, they have to get money out and get it out fast. And that's when you see Bitcoin run. You saw it with, Israel-Iran. You see it every time there's that kind of thing going on. Every time you think, Ukraine thinks it's going to lose now because America's going to pull the plugs on it, up goes Bitcoin. And then, maybe it's not going to happen, down it comes. So those acute moves, Bitcoin is for flight. Gold is for war. Bitcoin is for flight. So, if you're losing, you want Bitcoin because you want to run. And if you think you might have to fight, you lay in gold. And they're two very simple modes that you can look at and go, oh, That's happened. Oh, what's happening next? As a flag for your other investments.
So who's losing right now, Clem? Like who's on the run? Who's flying or who's
Well,
fleeing?
it's not people necessarily on the run. It's people who imagine that they might have to be on the run. So imagine you're at home, Kai, and suddenly your regulator decides that because you cover gold and silver, you're a bad person, and you've got to leave. What are you going to do? You've got to have assets that can come with you, haven't you? Well, in this day and age of money laundering, there aren't that many things that you can actually go, I'm going to buy that, and I'm going to go to the airport, and I'm going to get through the metal detector. Yeah. And, I always tell the story of the minister in Afghanistan that left $5 million in cash on the tarmac because he couldn't get it on the helicopter because he'd already packed it out with lots of assets. You don't have that problem with Bitcoin. $1 million of gold is, what is it now these days? It's a reasonable amount of weight. 100 million is a lot of weight. Yeah. And 100 million in Bitcoin, well, it's one of them, isn't it? So if you are about to, if you look at the history of dictators running, yeah, some of them get away and some of them get shot in the car park. Yeah. And these people have huge sums of money, huge sums, billions. Yeah. And if they decide that they better make sure they can leave in a hurry, well, what would you put your money into? Obviously you move it abroad, don't you? You move it and you launder it and you put it through countries, or we all know who they are. But nonetheless, you've got a cash flow, and that cash flow you want to take with you. You don't want to leave your 50 million or 100 million behind, or your 500 million. So, you start flipping that into Bitcoin. The interesting thing, and the Bitcoiners hate this, but when Iran got bombed and they had power cuts, 25% of the hash rate vanished, because 25% of the hash rate of Bitcoin is Iran. Okay. And you can go look at the chart of a hash rate when Israel was bombing.
Can you put that into layman's terms so everybody understands what you're saying? What does that mean?
Bitcoin, the machines that make Bitcoins are called miners. Okay, you plug them in and they go whir, and they do mathematics, and they're on the interwebs and they talk to the blockchain, and that's the thing that is the Bitcoin blockchain. And they're machines that make a hell of a racket and use a hell of a lot of electricity, and they do the decentralized maintenance of the Bitcoin network. So you can buy one. You go out and buy one, $5,000, plug it in, and make your house super hot, and earn the occasional Bitcoin, okay, or bits of Bitcoin. Now, to do that, you have what they call mines. So basically, warehouses right next to power stations that have thousands of these machines using megawatts. You can go check this all on the internet. And the US has quite a lot of it, and Iceland has quite a lot of it because it's got cheap energy, volcanoes and stuff. And it's decentralized, and that's the point. But 25% of those machines are in Iran, because they can take their oil and their gas flares and their surplus energy, and they've got it because they're a big oil producer that finds it difficult to sell their oil because of sanctions. Well, let's not sell it then, shall we, boys and girls? Let's just burn it here using our Chinese-bought mining machines, and make Bitcoin. And then, Bitcoin travels much easier than cash through the SWIFT network. Well, Iran over the years has built up a capacity where they are 25% of Bitcoin. They are 25% of the infrastructure of Bitcoin, because they can mine Bitcoin, and then of course it can be anywhere they like it to be. And that is an example of why Bitcoin is for flight, because the whole point of it is that it is extra governmental, and it can get around sanctions, and you can move it about, and you can be Robin Hood or whatever, and you can have your money tied up in Bitcoin like all the criminals. Yeah. And that's why Bitcoin is for flight, because if you think, it's getting a bit sticky here, what am I going to do? You buy Bitcoin.
Clem, can I just, for a minute here, can I challenge your assumption of the price move recently up to 120? Is that more like fight for flight, or is that more government related in the US? We just had Cyber Week in the US in the House and Congress, where they were discussing stable coins, CBDCs, but also 401k investors being eligible investing into crypto. How much of that is correlated?
There's a lot of that around, but remember, all that is most probably in the price. Yeah, because there was going to be crypto. There has been Donald Trump for some time, and that should always be in the price. So what it's quite difficult to do this, and I have to bring myself back to it over and over again. You know, if you know it, it's already in the price. Yeah. If it's about to happen, the price will reflect pretty accurately what is going to happen, because everybody in the hive mind is working it out, and a lot of people know. Yeah. So it's the unknown unknowns that do it. Now, obviously, there's a bit of a corner going on in Bitcoin because of all this, stuff that MicroStrategy, or Strategies it's called now, is doing, which is sweeping up. Attempting to call to the market in Bitcoin, encouraging everybody to jump on the bandwagon and hold Bitcoin forever and turn their fear into Bitcoin. And that has been, a very good support, as all the other things you mentioned have been a support. But, as they say, if things can't go on forever, they'll stop. Okay, so that is the thing to bear in mind with Bitcoin, I think, and have thought, and on your show have said around 120 is the top of this run. And I thought it was at 100 where I sold, and because the first run went up to 100, nice big round number, it stopped, it dilly-dallied, and I thought it could go to 120. Do I want to stick around for 20 with a potential 50% downside? Not particularly. Goodbye. But here it is at 120, 9 months later. That would have been quite a long hold and uncomfortable. It went down to 80, but anyway, cleared out back then, clear out on the first move rather than the second. And here we are at that number that I thought was going to be the high. So I can quite happily keep it there. But it's the unknown unknowns. If China started to sail its cliff climbing ships towards Taiwan, which they have, by the way, you should go look at these cliff climbing ships, because Taiwan is a cliff. The whole island is pretty much a cliff, and there's like 3 beaches, and obviously you can defend them quite well. So they built these cliff climbing ships so they can drive up to Taiwan and then jack up these ships, and people can run off onto the cliffs. So, so that will move your gold. Yeah. The moment those boats start heading that away, your gold you won't know because you don't have a satellite, but I tell you, gold will be moving the moment those ships leave port. If that was to happen, then obviously Bitcoin will go up a lot. Because all the people in Taiwan will go, oh, it's getting a bit sticky here. Oh, how am I going to run to the airport? Oh, I'll buy some Bitcoin. So that's the
Taiwanese premier was just denied entry to the U.S. as well as part of his trip to Central America, which is an interesting tidbit as well. Just interesting side note, right?
Yeah, well, I mean, you don't want to be goading the Chinese when you've got this trade deal underway, because that's the critical one. That is the critical one. And the Chinese are not softies like the Europeans. They're quite capable of going, oh, yeah, no.
Ursula was quite happy to make that deal, and I didn't see anything going back the other way. It was all like, we have to spend and invest. But that's a different topic here, Clem, because I want to use the last 2.5 minutes here with you about what are you bullish on for the rest of the year? Let's assume it's August 1st. What do you think is going to be most interesting until the end of the year?
Well, the one that I've got enough of, and too much of, and I love to I just absolutely adore, is platinum and palladium, because I've said this on a few shows because it just screams at me. They make 3,200 tons of gold, and last time I looked, 25,000 tons of silver. They make 200 tons of platinum. They make 200 tons of palladium. And let me give your viewers a nice catchphrase to hold on to. Yeah, the periodic table is back in fashion. Okay, the periodic table is back in fashion, and all those crazy elements, which I'm working in these days with in the science area, there's not much of them, and they're all vital to the future technologies. And it's very quick. AI there's no limit to the demand for AI, because there's no second place. AI is pure energy consumption. And it doesn't matter whether they make them more efficient. It doesn't matter whether they get more clever. They'll still want more intelligence, which is more energy. So there's right now, an infinite demand for energy. There is no limit to the amount of energy that states will build, because there's no second place. It doesn't matter whether America is the biggest economy in the world. If you're smarter than it, they will have to bow down. It doesn't matter whether you're Donald Trump, jumping up and down. If China's more intelligent than America, China will be the dominant power. and vice versa. If America gets more AI, it will be the dominant power. This is what they're doing right now. That's why they're building these data centers. That's why all of a sudden nuclear power is in fashion. Oh, we like nuclear power now. Yay. Oh, coal. Yes, we said it was bad, but we're going to open some coal mines now. They are going to boil the oceans. Now, the only way to remediate that is science. And one of the key ways of remediating pollution is catalysts. And platinum and palladium are catalysts, and they only make 200 tons of it. And the internal combustion engine is not going away now. And they use cat converters. And the reason platinum and palladium are so cheap is because the internal combustion engine was going away. It's not going away now. And not only is it not going to go away, they're going to be building all sorts of machines to make energy, and they're going to have to think, oh no, the pollution. Well, let's stick some platinum on the back end of that and try to remediate that. And they only make 200 tons of it. Now, once upon a time, platinum was the same price as gold. Not that long ago. Not that long before that, platinum was twice the price of gold. Okay, bear that in mind. Even a few years back, palladium was not $1,000 an ounce; it was $4,000 an ounce. So they don't make any of it. It's gone from no one's going to need this stuff to everyone's going to need this stuff. They don't make any of it. They make quite a lot of it in Russia. Well, that's a bit of a problem. South Africa, where they have difficulties, and some of it in America. They don't make any of it. Yeah. So you've got not much supply. You're going to have a lot of demand all of a sudden. Historically, it's 1-to-1 with gold, which is 3,200, not 1,300, 1,400, 1,200. Yeah. So it's like, what's not to love? What am I missing in this? So I love it. I'm up to my ears in platinum and palladium.
Fantastic. Clem, really appreciate you joining us. Thanks so much for putting some color around what is happening out there this summer. Lots going on, of course. Really appreciate the context. Where can we send our audience to follow your work?
Well, I'm about to open a financial website called AnewFN, which you'll see in that little box down the window there. And we've still got a wait list for it, but that's about to turn into users being switched on for it. So anybody that wants to get on the wait list, because obviously this is a very select audience. This is the sort of people that want to know stuff rather than say, my mate said, "Oh, buy this meme stock." That's not the audience you've got. So I think they'll find it very useful.
Fantastic. Awesome. Clem, really appreciate your time. Thanks so much for joining us. And everybody else, thanks so much for tuning in. Hope you enjoyed this conversation. If you did, leave a like, leave a comment. And if you haven't done so, hit the subscribe button. It's a free way to support us. We much appreciate it. Stay safe out there and enjoy the rest of your summer if you can. Take care out there.